Good evening, everyone. Good evening, everyone. Thank you so much for joining us today. So, if you're just joining us, let us know where you are streaming from in the comment section. Kindly comment where you are streaming from in the comment section. Let us know where you are streaming from in the comment section. If you are streaming from Lagos, type Lagos. If you are streaming from Uyo, kindly type Uyo in the comment section. And if you are streaming from outside Nigeria, do well to let us know where you are streaming from in the comment section. And make sure that you share this live stream with as many as possible. Share it with as many as possible. Share it with your family and friends. Share it on Facebook groups. Share it on different WhatsApp groups. And share the link on your WhatsApp status. Invite as many as possible to participate in this live stream. All right, so let us know where you are streaming from. Let's know where you are streaming from. So today we want to be discussing crypto trading strategies and plans. All right, so I have a guest speaker which I'm going to bring to the screen in the next few minutes. So let us know where you are streaming from in the comment section. Let's know where you are streaming from in the comment section. Network is terrible. Let us know where you are streaming from. So I'm going to be your host. My name is Emmanuel Jacob. I'm the founder of Digital Swap. So damn, network is terrible. So if you can hear me, kindly comment I can hear you in the comment section. Comment I can hear you in the comment section if you can hear me. If you can hear me loud and clear, comment I can hear you in the comment section. Thank you so much, Christian. Christian Achibon is streaming from Uyo. Thank you so much for joining our today's live stream. Thank you, thank you, thank you. Thank you for joining us. Let us know where you are streaming from, and if you can hear me, comment I can hear you in the comment section. Comment I can hear you in the comment section. Okay, thank you so much, Christian. Christian can hear me loud and clear. Christian can hear me loud and clear. All right, so I'm going to be bringing to the screen our guest speaker. So before I bring him to the screen, I would like to do a little introduction or kind of a tip of what we will be discussing today. So actually today's topic is crypto trading strategies and plans. So what exactly is crypto trading strategies? Crypto trading strategy is kind of your trading pattern. All right, so I believe every single crypto trader, forex trader, indices trader, you can name any kind of financial markets traders. I believe each and every single person should have his or her own trading strategies in order to be profitable in the course of trading the financial markets. You need to have plans, because if you don't have a particular plan on how to be able to achieve a certain target, you might end up being a broke trader at the end of the day. All right, so having a kind of a written down plan, a laid down principles on how you want to be able to achieve a particular target will help you to be very serious, to help you to remain on track, irrespective of whatever it is you come across in the course of trading the financial markets. So we still have a lot of people in this live stream that are yet to tell us where they are streaming from. So please do well to let us know where you are streaming from in the comment section, and make sure you share this live stream with as many as possible. So let's continue. So for you to be profitable, you need to have a laid down strategies, all right, in order for you to be profitable. So you need to have a plan. So there is an adage that says, if you don't plan to succeed, it simply means that you are planning to fail. So having a plan, okay, this is my target. I need $1,000 at the end of this month. I need $50,000 at the end of this month, and this is how I want to reach this target. Once I'm able to make a certain amount of money in a day, I'm not going to trade again. Once I'm able to make a certain amount of money, even if okay, this is going to be the number of trades I initiate in a day, or this is going to be the number of trades I initiate in a week. So, and you make sure you stick to it if you want to be a successful crypto trader. So that is just kind of a tip of what we are going to discuss. As I'm going to bring our guest speaker, he is going to take us deeper, and I'm going to give you an opportunity for you to ask questions at the end of this live stream. So it's just going to be probably 25 to 30 minutes session. So make sure you've picked your writing materials and take down some notes. All right, so I'm going to bring our guest speaker to the screen. All right. Good evening, Mr. Datimfon.
Yeah, good evening. Thank you for having me.
Thank, thank you so much for accepting our invite. We appreciate.
You're welcome. You're welcome.
So we don't want to waste much time, as we want this to be very brief. So I would like you to give us kind of an introduction. What exactly is crypto trading? All right. So while you came in, someone just joined us. His name is Joseph Ekitang. All right, and okay, he's here to state where he's streaming from. All right, so I want you to give us. You're welcome, Mr. Joseph. So I want you to give us kind of an introduction. All right, I want you to give us kind of an introduction of what exactly is crypto trading strategies and plan.
Okay, before I talk about, crypto trading, I have to um talk about the difference between crypto and then forex trading. Why? Because uh, a lot of people want to really differentiate it, but to be frank, it's not. There is no much difference. The only difference comes with the fact that you're trading um cryptocurrencies. The same thing you do in forex and crypto is the same thing. Why I'm saying so is because I trade both markets. So crypto trading strategy is more or less the same thing like any trading strategy. And a strategy is um, what the rules you will be using in order to take profit. Those set of rules for you to enter the market or even exit the market. So I don't know if I should go further because I have a lot of things I'll talk about, but because of time, maybe you have some other questions, Mr. Emmanuel.
Yeah, just in case you should maybe go a bit deeper. Thank you for joining us, Mr. Godwin Shala. Thank you for joining us. Just go a bit deeper into these
Okay,
strategies and plans.
okay. So I'm going to be very a little bit practical about it because I'm not really a theoretical type of person, but I'll try as much as possible to make it simple. So now, when we talk about trading strategy, basically it resonates around um, the set of rules you will have in order to enter a trade and the set of rules you will have in order to exit the trade. And it goes beyond the entry and the exit points. You could also have rules of maybe profit you would actually be done if you are a day trader, for example. For the sake of people who don't know different types of traders, I think we have scalpers who take trades in a short time, just few minutes, and they are out of trade. And we have day traders who just take open and close positions within 24 hours. And then we also have people who are swing traders who take trades big moves like They pay attention to time frames like 4 hours and above. And then we have position traders. Those kind of traders, they could hold trade for 6 months. Those are like institutions that take trade for a long time. So now your trading strategy will actually be different because of the kind of trader you are. Yes. If you are a scalper, the set of rules a scalper uses will not be the same with a day trader. And then we also have people who trade just technical analysis, and then we have people who trade just fundamental analysis. Those things are still part of trading strategy because there are some people that are okay, they trade only technical analysis and days of news, they avoid it so that they will not be caught up with a lot of issues. Avoiding it is the strategy. Those are then we have people who trade fundamentals. They trade let me not say fundamental, they trade economic data. When high economic data comes out, that's the only time they trade. For example, there are people that trade only on the day of NFP. That's the first Friday of, I think, first Friday of every month. That's still a strategy. That's their own strategy. And then we have people who combine both together and they trade. So, but when it comes to crypto trading, it's way beyond just the NFP days and the rest. You For a crypto trader, it is more important. The research is more important. Doing research on crypto projects are more important than anything. Yeah, as a crypto trader, you cannot. Personally, it's my own opinion. I believe as a crypto trader, you cannot just be a technical trader as a crypto trader because crypto is really driven by sentiment a lot. All the markets are driven by sentiment, but cryptos are very high. Yeah, very high. So that's basically strategy. I don't want to go into defining. I want to go into giving you examples. So, Mr. Emmanuel, should I still go on? You have any question?
Okay, thank you for that. That is quite explanatory. I think it's quite simple. So I'd like to ask, because I believe maybe our viewers out there might be like, you've mentioned a couple of strategies, you've mentioned a couple of things one should take into consideration before maybe embarking on their trading journey. So I want to ask you, which of these strategies do you really think, or do you think, or would you recommend for a beginner who is just starting out, a beginner who is just starting to trade maybe the forex market or the cryptocurrency market?
Okay. What I would um, before now, I would actually answer a different thing, but there are a lot of things I've got to learn within this year that has changed my perception about the market. Actually, to actually do trading very well, not especially if you are not just a technical trader, when you combine both technical analysis and fundamental analysis, I will say it's so much work. Yeah, it's so much work. But what I would advise for someone who is just beginning, I would advise for a crypto trader, someone who's trading crypto. Let me start with crypto, especially. You have to start by knowing what assets the assets you're trading. Yeah, both crypto or forex. Whatever assets you're trading, you should study that asset. What I mean is, for a crypto trader, you don't have any business going to trading when you don't know the asset itself. Meaning, you have to understand what blockchain technology is, because every single cryptocurrency is like it's like a company, it's a project. So you need to approach it with that light. So That's one of the things a crypto trader to do, or any trader should do as a beginner. Understand the assets you're trading. In the case of forex, you still need to understand the assets you are trading too. If you are trading if you are trading currency pairs, you need to understand what happens in different currencies, because in forex you pay two different currencies to trade. If you are trading stocks, you need to understand what drives the stock market before you go and trade. If you are trading commodities or equities, you should know. If you are trading oil, you should understand the things that affect oil before you even go to open your charts. So let me stay more on the crypto side because this was majorly crypto topic. So for a crypto trader, it I would say that researching on the project will give you an edge. It doesn't matter if you're trading futures or sports, you can still make money. It's just that you should understand that the market has cycles. Every single market has cycles. We have the bear market and we have the bull market. So in the bear market, just as this one, you shouldn't be trading if you are a sports trader. Yeah, you shouldn't be trading now as a sports trader. If you are a futures trader, you could get on and trade, yes. But if you are a spot trader, you should limit the time that the way you trade in the bear market. Instead of that, you should focus more on investing long term than trading. So that's basically it. Mr. Manuel.
All right, thank you so much for that. And if you did not get it right, I think I will just do kind of a summary, because this one mantra that is really popular in the crypto space, D is it DYO, which is do your own. Sorry, what is it?
Mm.
DY.
DYOR.
Thank you very much.
DYOR.
DYOR, which simply means do your own research. All right.
Yeah.
A lot of people out there who are into the crypto space, all they need is maybe a recommendation. They just need for someone to say, go and buy so coin. And they are
Yeah.
not ready to put in the work. They are not ready to know these things on their own. They are not ready to know what kind of things they've got to consider before they think of investing in any cryptocurrency. So you need to, this is the best strategy for you to use in trading any of the financial markets. You have to be a very good researcher. You have to know, okay, for instance, even if Elon Musk is the one recommending a coin for you, all right, and you know you are going to be profitable, it will still make sense if you go and do your own research. Reason being, if Elon Musk mentions a coin, yes, it's going to pump maybe for short term, but what will happen in the long term? So this is when your research is going to help you. If you only have to maybe buy this coin, make profit and exit the market like forever, or if you have to maybe buy this coin, take profit and you keep some for long term. So that is why you need to take research very seriously. So if you want to be profitable in your crypto trading and investment journey, if you want to be profitable in trading of forex, commodities, options, you can name it. You have to be a very good researcher. You have to really understand what exactly you are doing. You don't just have to invest because people are talking about it. And one more mistake a lot of people like making in the crypto spaces, someone will just post maybe a chart or maybe screenshots of profits they've made from a particular cryptocurrency, and that is the same time a lot of people will rush to buy that particular asset. So
Yeah.
someone has made profit already and you are rushing to buy the same asset that has already picked, an asset that people have made profit and they are thinking of cashing out, and you end up buying the top. So learn how to make research, or learn how to do research before you think of investments. So I have another question for you, Mr. Datimfon. Um, I want to ask, how can one come up with a trading strategy or plan?
Okay. Now I love that you asked that question. It's very, very important. Okay. A trading strategy, or I'll use plan in this stage. That's plan. You cannot talk about strategy without talking about a plan. But most one of the I'll talk about how you could go about the plan, the strategy, and then the plan. Before I talk about one of the things that will make you not to follow the mistakes traders make, that will make you not to follow the plan. Because there's one thing to do the plan, another thing is to follow the plan, because we are human beings, we are emotional beings, and some things will cloud our judgment at some point. So one of the things you need to do is to always track your progress. And how do you do that? The only way you can do it is through documentation. So even if you want to take, when I was starting out trading, I used to do it, although I don't do it now because I've reached a stage that I could track it on my own. So as a beginner, what you should do is you should write down one of what the things that will be your criteria. Okay, let me talk in technical terms now. Like, let's focus on technical analysis. There should be a set of rules for you to take a trade. Let's say, for example, okay, maybe you just want to trade only when you see a bullish engulfing pattern or a bearish engulfing pattern, or best way, you want to always wait for the market at a support level, or at a major support or resistance level. That that is a plan. Now you need to document it. You need to write it down, and then before you actually place that trade, you go back and then check. Okay, okay. Let's say the first one was, is he in the support level? One. Um, is it still in a support level for some people that do, okay, a strategy called top down analysis? Is this support strong in a bigger time frame? And then also, is there any fundamental, if for people that combine the two, is there any fundamental that can contradict the fact that I'm buying at this point, at this support level? It's you should document. You have the plan, and one thing you should understand is that my plan and your plan cannot be 100% the same. We don't have the same face. We all have different faces. What works for me might not work for you. Personally, my own style of trading, my own strategy, it's very demanding because I combine both together. So, and my own plan helps makes me to take trading decisions very fast because I'm a very sentimental trader. So for someone else that is a very patient trader, it might not really work for the person. For someone that, let's say, is a swing trader or a position trader, it might not really work for the person. There are some people that are cool with, when they open a trade, they keep it for a long, like they to monitor it. There are some people that they don't like monitoring it. So you no two people have the same strategy. But what you should do is, whatever strategy you're using, you should document it, and then after taking a trade, you should if the trade goes in your favor, you should pay attention to what made it go to your favor. And then if you actually not didn't go to your favor, you should also document it. Now, even in the plan, it should also include your risk management. It should also include your risk management, which is, personally, I would say that's one of the things that will make you stay profitable. I used to tell my students, the problem is not you knowing how to trade, like knowing how to do analysis. The problem is risk management. And you cannot talk about risk management without talking about account management. So the account management is how you make money. If you don't know how to manage an account, you will not be able to make money because this is a speculative market. Nobody knows what is going to happen. No matter how good you are, even the best of the analysts have lost trades. But you need to win big and lose small when you lose. That is one of the ways you you could make it in trading. So you need to actually document your trading. You need to set goals for yourself. Take trading. Trading is a business, so you should take it like a business. The same way you would open a supermarket and then you take stocks. That's the same way you should approach trading because it's the same thing you're doing. The only thing is that you're doing it with currencies and then you're doing it online. That's just the only difference. And define your entries and your exits levels. Your entry and exit level is very, very important. And also, because of time, and also, you need to have someone you are accountable to. That's where mentorship comes in. Now, a lot of people think that they need to have a physical mentor that they need to sit down with. No, you don't. I've never in trading particular, I've never had a mentor that I sat down with him and I asked him questions because their mentorship is both ways. But I have people I follow and they guide me in my trading decisions. So mentorship cannot be talked down on when it has to do with strategy because you can have that plan, the strategy, but then something can make you not to follow it. Your mind, things like revenge trading can come into you and you cannot. So you need someone that can checkmate you always. So that's I have a lot of things I would say, but because of time, let's just continue.
All right, all right, all right. Thank you so much for that. Like I said earlier, I want this live stream to be very brief. So I have a couple of questions to ask, and I would like you to be very brief about it. Thank you so much. And please, we are going to give. I've seen a question from Chi. Is it Chi Boss? So I'm going to give you an opportunity to ask, or we are going to attend to your question later on. So to others, if you have any question in regards to what we've discussed so far, please do well to drop it in the comment section, and we are going to attend to it once we are done. All right, so the next question I want to ask you is, what would happen to if someone does not have a trading plan at all? If someone doesn't have a trading strategy, what would happen to the person?
Okay, that one is very brief and straightforward. What the person is going to be inconsistent in making decisions. He's going to be jumping from one strategy to the other. Yeah, because a strategy can never be 100% perfect, but you keep developing it, remove the problem and keep the one that is working, add something, remove. That's how a strategy is. So the person will not be consistent. There will be no growth.
All right. So if you don't have a trading strategy, you are not going to be consistent. You are not going to have a criteria that keeps you in check. You are not going to be profitable, both in long term and short term. Thank you
Okay.
so much for that. So the I think this is the last question. So if you have any question, please start sending in your questions. All right. So the last question I want to ask is, what should one do if, for instance, you initiate the first trade and you lose money? You initiate the second one and you lose money. You initiate the third one and you lose money again. You initiate even up to the seventh time. That is if you have the funds. That is if you don't get to lose everything. And like you lose 7 times in a row. What should a trader do if they are in such situation?
Okay. I almost thank God that you are saying that. Um, especially for a day trader. Um, I would say don't trade again that day. But I'll tell you, live and direct, it has happened to me. Even up till now, it's still happening to me. But one of the things I'll tell you what I do in those situations. The thing is, the problem is not having lost trades for 7 times. That's not the issue. The problem will come from risk management. Yeah, it will come from risk management. So if you can fix your risk management, and in risk management, if you never knew what position sizing is, please try as much as possible. It's a very huge topic, something that is very practical. I won't be able to even explain it here. If you don't know what position sizing is, it's something you should go and learn. So the position size will fix that. So because let's say you have a $1,000 account and then you lose 7 times. So if you used to use $100 to enter and then your stop loss used to be like maybe 70% of the $100, that is where the problem. That's where I'll tell you stop trading. And also if you are a if you are should I say an aggressive trader, you should stop trading. But if you are a conservative trader, you can still trade. Yeah, you can still trade because one trade could actually cover up a loss and give you profit. So that's what I would say. It depends on the kind of trader you are, and that's where
All right,
strategy comes.
thank you so much for that. All right, you see reasons why you need to have a strategy, reasons why you need to have a plan. Then I also want to add to that. I want to maybe expand what you just said. All right. So you talked about risk management, how someone with $1,000 account would split his funds to maybe 10 places and initiate a trade with maybe $100 and have a stop loss of maybe 10 to 20% and all. So this simply means that you don't have to put your eggs in one basket, all right? You don't have to, oh,
Yeah,
you have $10,000 and you use the whole $10,000 into a single trade. You need to make sure you checkmate your greedy. I mean, like virtually everybody are greedy, all right? So you need to make sure that no matter how greedy you are, please try and protect your accounts. There's this adage that says that it's not about making or becoming a millionaire in the next 24 hours after you've initiated a trade. It's about remaining in the game. All right. Then another one says that capital preservation is better than profit. Like, for instance, you are chasing a particular profit. It's better you even preserve your capital than to chase making huge profits by risking a huge amount of money because you want to make a lot of money. And motivational speakers will tell you take risks. If you don't take big risks, you are going to please. That doesn't apply in trading. Yes, you may use huge capital, huge amount of money. You go all in and you are successful and you make huge amount of money. But what will happen in the long term? What if this becomes part of you and because you were able to make like you use $50,000 and you were able to make like maybe 50%, 100%, and you thought that is how it's going to be? I will ask you to go and ask people that made a lot of money from the meme coin bull run when there was a lot of bull run in the crypto space, and people with no experience, they made a lot of money. They made a lot of money and they thought that is how it's going to be. Ask them if ask them if they are still trading currently because they have no experience, and since they put maybe they use $20 invested in Shiba and they made maybe $6,000, and now they will now be saying, oh, so $10 give me $60,000 or $6,000. So if I put six
$6,000.
thousand if I put $6,000 to give me $1 million.
Uh,
So it doesn't work that way. And please take profit and take good care of yourself. All right, take profit and take good care of yourself, because when it gets to a point wherein you are being liquidated, liquidation doesn't care if you have eaten. It doesn't care
Oh,
if you are squatting with your friend.
at
Please
all.
make sure you take profit, take good care of yourself, and don't go all in no matter what, no matter how promising it is. Please don't go all in. Diversify. Make sure you manage your risk very well. Have these things written down. All right, have these things written down, make it very clear. Know the amount of money you should enter a trade with. So I want to stop there because I don't want this session to be lengthy. So we have a couple of questions from our attendees. I'm going to bring them to the screen, so I hope you can see this question. So please
Yeah,
help
okay.
person.
Okay, good evening, boss. Thank you for the value. I have a question about this section. Like, what is the minimum and maximum market cap and the minimum and maximum total supply possible for an asset to worth taking? Okay.
Sorry,
Well,
excuse. So
yeah.
please, we are rounding up. If you have any question, please drop it in the comment section and we are going to attend to it. All right. And depending on when you are going to see this video, since the video is still going to be on this YouTube channel, depending on when you see this video, please drop your questions and we will be in the comment section chatting with you. So if you have any question and you want us to answer you right away, please drop it in the comment section. We are wrapping up, please. So continue.
Okay. Personally, before I used to think, okay, I would say it's not necessarily because of the market cap and total supply that should make you take your decisions. Yes, but you should put into consideration. I don't want you to get me wrong. Before now, I used to think, once market cap is good, um, everything is okay, and total supply, everything is okay. But it's not really because I'll still answer it, but I want to make you understand that that's not the main thing that should be a yardstick for you to invest in an asset. You should even pay attention to um, the number of people who you're sure are going to be investing in it, people who are backing up the projects, things like that. How people are really talking about it. Then the utility of the project itself. But I wouldn't say there's any minimum or maximum market cap or total supply. It's relative, actually. It's relative. It all depends on it all depends on how much everybody in the world are actually using that particular coin. Before you invest in an asset, what you should always ask is what will make more people to buy that asset? What will make more people to buy that asset? That's what you should really pay attention to more. So no matter the number of, there is no number of market cap or so that would give, because if you want to base like that, like the Shiba, it wasn't making sense, but it deleted a lot of zeros because people were investing in it and it was a meme token. So that should make you understand that community is very important.
All right, thank you very much for that. And I think I want to add, please, there is actually nothing like a particular amount of market capitalization or maximum or minimum. All right, I think it's dependent on community, dependent on the coin's utility, and dependent. Yes. Market capitalization, yes. If a market cap of a coin is low, or if a market cap of a coin is very small, and this coin has a huge community, it has huge people, good people actually, so people that have succeeded in other crypto projects. If they are the one backing it, if you check the investors behind a particular crypto project, These are the criterias: small market cap, good community, um, uh, good investors, and it's the coin's utility, the use case of that particular cryptocurrency. If these four things are in place, then it's going to be kind of a promising investment. Okay, let's move to another question. Oh, someone said he lost his entire, is it? That was my case yesterday, my portfolio. Oh, so sorry about that.
Okay. Sorry about that.
I would
It's
say it's
normal.
just it's normal. So you'll
It's
be back.
normal. So you should focus
You'll be
more on
back.
knowledge now. You should focus
Yes.
more on knowledge now. Yeah.
Focus on
Focus
knowledge,
more.
have a
Yeah.
strategy, have a plan, and diversify. Don't go all in. Even if you have
Yeah.
$50, seriously, even if you, I wouldn't even advise someone to use 50, but with futures, actually, even if you have $50, you can split it to maybe um you go in with maybe $10 on futures. But really,
Yeah.
trading needs good money. Seriously, trading needs good
Seriously.
money, because if you are using small money, you are going to be greedy. All right,
Yes.
if you use small money, you will be greedy. But if you use big money, like $1 million, I'm just saying, oh,
1%. Just 1%.
1% of $1 million, you are made, and you can close the trade and forget about everything. Okay, the next question is from Mr. Explore Him. Say, good evening, sirs in the house. Please, my question is how to control emotions in the market. So the question
That
is
was
for
the,
you.
yeah, that was the same question someone asked on the Binance meetup. I remember. Yeah, emotions is one thing. In short, emotions is what will make you fail, and emotions is what will make you win. Yeah, it's a two-edged sword. Sometimes your emotion can make you win, and it can make you lose drastically. I think one of the ways to checkmate your emotions is by following your strategy and your plan. So when your emotion clouds your judgment, you should document it and find out what made it to happen. So next time you will not do it again. And emotions make you do revenge trading. And if you had your plan, if you stick to your plan, you won't do revenge trading. Enter every single market as if you are going to lose, but hope that you're going to win. Now, that do you know what that will make to you? What that will make you do is it will make you control your stop loss. It will make you not risk too much. It will make you not go all in. So, like I said before, look for a mentor. Mentorship is very, very important when it has to do with trading. Mentorship is very important. Even me, that I didn't have like a physical mentor, but I had people I followed online and I listened to. So don't really think that you really need to. I have a lot of people that come to my inbox and tell me they've been really following me, that I really helped them, and I've never spoke with them before. And there are other people out there helping people by what they put out on the social media. So have a mentor, whether you are speaking with the person or not. Someone can still be your mentor. So that's all. And then if
All
you actually, let me add one more thing. If you actually have money to meet a psychologist, I think it's a good thing. Yes, because the hedge funds, they actually have psychologists in their company that talk to you and know where the problem is and motivate you, because trading can actually make you depressed. I understand.
right, thank you so much for that. And I think I want to add to that. Yes, like you said, enter a trade as if you are going to lose, and this is going to help you cut um your exposure, like
Yeah.
your capital's exposure to the market. All right. If you know you may lose, then you are going to be very careful. Another thing is confidence. All right. The only thing that could give you confidence is knowledge. If you have knowledge, you are going to be confident. And if you know what you are doing, if you are risking a very little portion of your capital, it's going to also give you confidence that in case you lose maybe some percentage of this money you are using to trade, you still have other ones. All right. So if you have confidence, at least it will not take away the emotions actually, but you are going to be kind of know that you have kind of a backup, that if anything happens, you know you have where to fall back to. Okay, so this is going to be the last question. All right, so the last question, is this even a question? Yeah. What happens if I choose to keep a trade and I believe it will do 60%? Okay, it will retrace and even get me liquidated. But if I close the trade, it will now pump and even do 80 to 100%.
Okay. Okay. You want to hold, if you want to hold a position for a long time, then make sure you have funds. If you had something that backed up that your trade. Now, if you have this issue, definitely you had an issue of entry point. So I think you should fix that first. Yeah, because if your entry point was good and then your position size, that's another thing, was good, it shouldn't get you liquidated. Yes. Once you fix those two things, liquidation will not be part of it. Then another thing is, if you are not a swing trader, then go and learn how to swing because that's the swing trading you're talking about.
um, I said that was the last question, but this is the
Another
final.
question. No, no issue, no issue, no issue.
Can
I'm still cool.
you see the
Please,
question?
yeah, please, what is the best percent to risk in the market? Okay. I love all these questions because I used to ask them in my mind too until I now understood. Um, that percentage something, I will tell you a trick that I discovered. In short, I actually want to write a book on it, a very short PDF on it. Now, any percentage I tell you is relative. The percentage should be according to your capital. So I wish it was something that I could actually ask the person that would ask the question to talk back to me, but that's not possible because I wanted to say that an example. If you have, let me give you an instance. If you're trading $1 million account and then I'm trading let's say I'm trading like $10,000 account, then I tell you the percentage. Now I tell you, okay, you should be risking 5%. Now imagine risking 5% with a $1 million account. So I'll review the secrets. I want to write a book about it, but I'm still working on the formula. Now I'll reveal a secret to you. The bigger the capital, the smaller the percentage you should risk. That's the formula. Because if I should trade a $1 million account, maybe I might be going in on the trade with 0.1% of that account. So that I'll be able to sleep. If I extend it so much, then it will be 1%. That means I have that kind of trade. I had a 99% possibility that it's going to go well. Then I can go do 1%. But on a normal, maybe 60% probability, I'll do 0.1% for the trade. So I cannot do 0.1% with a $50 account.
Exactly.
Just like Mr. Jacob said, when you have low capital, it makes you risk more. So if you are using small money, yes, you can risk more. Cool. And you might hit it big. But you shouldn't risk in such a way that what I do is I divide the capital I have by 50, knowing that I cannot lose 50 straight loss. Nobody can even do it except your own is not normal. I don't think anybody can lose 50 straight trades even if you don't know how to trade before. But let's just say it's possible. It to take just you just need one trade to you know make it go well. But so it is relative actually. It's relative.
All right. We really appreciate you, Mr. Datimfon, and
Yeah.
this is where we want to draw the curtain for today's session. Thank you so much, and we hope to have you again some other time.
Thank you
Thank
for
you
having me.
so
Yeah, it's an
much.
honor.
All right, guys. We have come to the end of today's session, and I hope to see you next week, same time, same channel. So if you are here to subscribe to my YouTube channel, hit on the subscribe button and subscribe. Turn on post notification by clicking on the bell icon so you get notified once we come up with another session in subsequent days and other videos on this YouTube channel. So on the description of this session, I'm going to drop a link to our Telegram channel. Click the link and join our Telegram channel for updates that revolves around crypto trading, blockchain, Web3, you can name it. All right, so we hope to see you. Thank you so much for your audience. Thank you for your time. I hope you've learned. I hope you've taken down some notes, and we appreciate you for your time. So we are going to see you in subsequent days. Goodbye.